Guys, welcome to this module. And this is an extremely important module because it's one of the most common questions that I get often every single day within my tax and accounting firm. And that question is, what can I write off within my industry? So we're going to cover some of those topics. And within those topics, we're going over car rental business deductions, home office deductions, section 179, and buying your car under your company name. All this correlates to write-offs and lowering that tax liability. So let's dive into it. So I want my car rental fleet owners to get in the habit of knowing what they can write off and what they can't, simply by asking them this question, asking yourself this question. Is what I'm about to spend my money on, is it ordinary and necessary in the nature of my business? Do I need this expense to help run my business? If the answer is yes, that's a tax write-off. If the answer is no, that's not a tax write-off. So that's how the IRS looks at it. Is it ordinary and necessary for you to use this expense to run your business? So I listed some of those common car rental fleet deductions here, like a garage fee. That would be ordinary and necessary for you to run your business because you need to store your cars. Lease payments if you're leasing out cars. If you have lease cars. Parking and tolls. People are driving, moving, parking. You need to store your vehicles. That's a necessary expense. So I need you to get in the habit of asking yourself, is it ordinary and necessary for you to use this expense to run your business? If so, it is a write-off. But let's tackle some of these tricky deductions, right? So notice how I put loan interest and not loan car note payments. We cannot deduct car notes because for the simple fact we'll be deducting that asset twice. We're already at the beginning deducting that auto loan by using section 179 and bonus depreciation. So we can't double down and basically deduct those car note payments because that's essentially writing off that vehicle twice if we think about it. So these are just some of the common car rental fleet deductions that I kind of want you to take note of. And if you're currently not taking inventory of these and keeping track of these, I want you to, because this is going to help us lower our tax liability with business related meals. So say if you're buying a car for someone outside of a dealership and you just want to meet them and y'all guys have lunch with each other, that is considered a business meal. You're in the nature of conducting business. You want to see who this guy is, see what the vehicle is, and you go out to eat. That's a business meal, right? And we're going to go over business vacation and all these, but these are just common car rental fleet deductions. Another one I wanted to talk about is the home office deduction. And for personally owning a tax and accounting firm, this is one of the most common deductions that a lot of entrepreneurs don't take advantage of. Like roughly 50 nowadays due to COVID, probably even more, but roughly 50% of business owners work from home, right? So I noted that, but I also noted that entrepreneurs aren't taking this write-off. So if all entrepreneurs are usually working from home, how come they're not taking a home office deduction? And I know y'all have a home office there. So let's go over the home office deduction, what it's really about. So with the home office deduction, the IRS is basically telling you that, hey, you're able to write off a portion of your home and the portion of expenses related to that home office on your taxes. So your mortgage, your rent, utilities, say if you have a TV in your office, that Netflix account, internet and streaming, all a write-off. So if my home office is 300 square feet and my entire home is 1,500 square feet, if I take the percentage of that, that's 20% of my home, right? My home office is 20% of my entire home. So therefore, 20% of my mortgage gets deducted, my utility gets deducted, and so on. So this can add up, especially if you're staying in a fancy condo or even in like a normal apartment where your monthly rent is like $1,500. This can add up and this can help lower your tax liability. So the home office deduction, although is one of the most heavily slept on deduction, it needs to be taken advantage of. Another one is the section 179. So we open up a car rental fleet, right? We're buying business vehicles, large vehicles, or it could be passengers. Instead of depreciating that over its useful life, we can actually, due to this tax law, section 179, we can write this off in the current year. That's why I tell some of my clients, hey, if you plan on having a high revenue grossing year, let's do section 179 and write off all your vehicles that you buy. or may use this as a tax strategy towards the end of the year to help lower your tax liability. But Section 179, especially in the car rental fleet industry, is y'all should know this by hand. I need y'all like, okay, I can write off this car within the whole entire year. So let's dive into Section 179, excuse that tongue twister. Let's dive into Section 179 and see some of the requirements and limits that comes with it. And this is just a little fun fact. The G-Wagon is one of the most common vehicles used for Section 179. This G-Wagon and Ford F-150. And that's because it meets that weight requirement. So Section 179 limits and requirements. So it must be either equipment, vehicle, or furniture. It can't be any building or land. So yes to your vehicles that you're buying within your fleet, but no to that car garage that you plan on building, right? And it cannot be at lease property. So if you are leasing your cars, you aren't able to use that as a Section 179. You just have to write off those lease payments. And it must be used for business. That's obvious, right? We have to use it for business. If it's something personal, we cannot use that. Granted, it must be used for more than 50% of business. So if you do use it for personal, maybe you went to the store a couple of times or whatever for personal reasons, you're still able to use this Section 179. And the total assets for that entire tax year must be under $1 million. But here's the tongue twister on this one. Here's the basically the rebuttal on this one. Not all vehicles qualify for this deduction. So there is limits and requirements in order to take advantage of this Section 179. And that's basically, if the vehicle's over 6,000 pounds, kudos to you. We can use that. Nothing about it. We can take it off. We can write it off in the full year. If it seats more than 9 or more, we can write it off within the current year. That some vehicles are passenger vehicles under the 6,000 pound limit. Therefore, is limited to 11,160 for cars, or if it's a truck for that amount. But don't worry, because with bonus depreciation, we still can take advantage of writing off that passenger vehicle, writing off at least a portion of that vehicle instead of none of it. So I gave you a list of vehicles that should qualify for Section 179 in case you plan to add more to your fleet or you want to take advantage of this tax write-off, basically. So do your research on here and think about this, guys. If it weighs 5,000, if you want to do some improvements to the car to make it weigh over that 6,000 mark, you can do that. And you can write off the improvements. You just add that onto your loan amount or wherever your asking price is for. So yeah, I did want to give y'all guys a list of assets y'all guys can write off. So buying your car under your business name is another question I get often. And I kind of want to address this topic by saying, is your business credit within your business good or bad? That's the first question I ask my clients. If it's bad, I kind of recommend you co-signing under your business, but it just all depends. I want you to get with your credit specialist or your credit guru, however they want to say, and see if this model fits right with you. That buying your car in your personal name and using it straight for business, as far on the tax side, you're still able to write it off. So I don't want us to get too worked up with buying a car under your business name. Just know that it is an option, and if you want to boost your business credit, yes, this is a feasible thing for you. And plus, it just feels great having your business pay for your company car or under your company car. And that's the end of this course. But this is one of the most common questions that I get often. If you have a question like this within within your space, please feel free to reach out to the Facebook community group. See if someone else has the same issue, or you can shoot us a call and we're able to work things out and get you the answer you need. So thank you. And let's move on to the next course.